Almost every conversation I have with founders right now eventually arrives at the same question. It usually shows up in one of two forms. Sometimes it sounds like, where is our next decade of growth actually going to come from? And sometimes it sounds like, what do I have that is actually durable in this business? Both questions are really the same question. They're both asking what is structural here and what is just current. It's a fair question to ask in 2026. Private equity has poured into the space at a pace none of us have seen before. Aggregators are buying anything that fits the model. Digital lead generation has gotten more expensive and less reliable. Generative AI is being marketed as a growth driver, and most of us are not yet sure whether it is a real one or a story we're telling ourselves to feel like we're keeping up. Meanwhile, AUM growth across the wealth management industry has come largely from market appreciation and M&A, not from organic client acquisition. Industry analysts have called that pattern as unsustainable as it is impressive, and I think they're right. In that environment, the firms that are going to be standing in 20 years are the firms that have built something structural, not a tactic, not a campaign, a piece of architecture that compounds quietly and consistently and is hard for anyone else to copy because it took decades to build. That is what drew me to today's guest. Wescott Financial Advisory Group is not a firm that was founded the way most RIAs are founded. It was not started by an advisor who left a wirehouse with a book. It was not started by an entrepreneur who saw a market gap. It was started in 1987 by an attorney at Duane Morris LLP, a 1904 founded law firm that today has roughly 900 lawyers across the world. Wescott was Duane Morris's first ancillary business. The firm was, quite literally, built inside a law firm. That is not a marketing story. That is a structural fact. And almost 40 years later, it is still producing pipeline. What I find most interesting about Wescott is not just the origin. It is what they have done with it. The firm has used those 4 decades to build a kind of compound asset that newer firms simply cannot replicate. They have intentionally extended the legal vertical into pharmaceutical executives, into Fortune 500 general counsel, and into other complexity-driven professional verticals. They have layered on a behavioral and psychological model that was actually born during the 2007 financial crisis, when the founder made a counterintuitive decision to invest in his people instead of chasing new business. They have brought in a 20-year Vanguard veteran to translate 4 decades of philosophy into operational architecture. And they have handed the current growth strategy to a next-generation leader whose path into wealth management ran through Pandora Media and large-scale digital campaign optimization. The last decade matters because what Wescott is showing the rest of us is that structural durability and current-day relevance do not have to be in tension. You can be 40 years old and still be the most curious firm in the room about what AI does to client experience. You can have a 4-decade-old center of influence relationship and still run a serious test and learn program on digital advertising. You can have a founder who is still in the firm and a next generation leader who came from outside the industry, and you can hold both of those things at once without losing your identity. That is the conversation today. Not just how Wescott has grown, but how a firm born in 1987 keeps making itself current in 2026, and what the rest of us can learn from a growth engine that was, in their founder's own words, mostly designed in 1987 and still working today. This is Growth Leaders of Wealth Management. I'm Meg Carpenter. Every episode, I sit down with leaders of some of the fastest growing firms in the industry to understand the choices, the structures, and the decisions behind their growth. Today, I am joined by 3 people from Wescott Financial Advisory Group: Grant Rawdin, founder and CEO, Carrie Delgott, president and chief operating officer, and Alex Rawdin, director of client development and growth strategy. 3 guests, 3 vantage points, one firm with a genuinely uncommon origin, and a current growth model that is more sophisticated than most in the industry know. You will hear how Grant built the firm out of a law practice in 1987 and how he has nurtured that founding relationship for almost 4 decades. You will hear how Carrie has spent the last 7 years building what she calls a growth engine on a 4-part foundation of people, process, technology, and data. And you will hear how Alex is using everything he learned running campaigns at Pandora Media to centralize and democratize business development across the firm. We talk about a 2021 acquisition that tested every assumption they had about integration, a digital advertising experiment that they turned off and may turn back on, and a weekly all-hands ritual called Monday Morning Quarterback that has been running since the pandemic. If you are a founder thinking about how to build something structural, a president or COO building the engine underneath the philosophy, or a next generation leader inheriting a 40-year-old firm and being asked to make it current, this episode has something for you. Today's growth leader is Wescott Financial Advisory Group, a Philadelphia-headquartered fee-only RIA approaching its 40th anniversary. The firm manages $4.2 billion across 27 advisors, serves 515 core households plus 125 strategic relationships, and has a long-standing focus on lawyers, pharmaceutical executives, and Fortune 500 general counsel. The conversation that follows is the operational story behind those numbers. Here's my conversation with Grant, Carrie, and Alex.
I always wanted to be a lawyer, and the kind of lawyer I really wanted to be was a counselor. And when I wound up getting into the area of the law was tax and business, which was often really transactional. There was some relationship with a client, but it was generally around a transaction. And so as I thought through my practice and what I wanted to do, there was this nascent profession that was developing called the financial planning industry. And as I looked into that, it was sort of a combination of being attracted to being able to be a counselor, being attracted to being able to have a substantive approach to an area where working with clients, taxes and estate and insurance and a whole slew of areas, and be able to express it in a business entrepreneurial way, which really had, I think, as part of my heritage and background, but wasn't really part of the legal profession. So that took me to say, hey guys, I'd like to do something a little different. And as I explained what I wanted to do, the law firm was very interested, saw it as an allied business, and was good enough to support me when I started Wescott, 40 years ago.
That's pretty amazing. I feel like I can't take myself back to that moment in time, but that feels like very forward thinking, of course, on your behalf, but also on behalf of the partners at the firm. That couldn't have been an approach that they could have looked at and seen similar experiences that had been successful outcomes.
No, at the time, there were a few ancillary businesses associated with law firms, not too many. A couple that were associated with financial planning, but very different. No, it was sort of like, there's the cutting edge and the bleeding edge, and we were maybe a little bit to the bleeding edge because in those days I had to explain what financial planning was before you could say why we're good at doing that. But the firm, they didn't feel like they had a lot to lose. I was a known entity for my legal practice there, so they sort of rolled the dice, and everybody won, including our clients and all the great staff that we have.
So back in the early days of the business, Grant, what were some of the initial drivers of growth? How did you build the business? Where did your initial clients come from? What were some of the key indicators of your early success?
It's really interesting because we started with no clients. But one of the things we started as a fee-only financial planning firm, which was a little bit less common in those days. Financial planning firms were usually associated with broker-dealers and the commission structure and insurance and whatnot. And so I came out of the bat looking for COIs, but what I found was that the best COIs were other financial planners, others who were in the business who didn't want to get into as much in the financial planning side. They were happy for me to engage and do the work in financial planning. And then they would be there as part of the implementation plan. So from the get-go almost, I had a couple of corporate clients who were very good at sending me a lot of business. Evolved over time, but that was, the first, great break, and the notion about, finding COIs who's, so there's cross-pollination and ability to satisfy each other's needs.
And then take me through some of the big inflection points to get us to more current day. If you think about the history of the firm, you started out of Duane Morris, you grew from some of those initial corporate clients who were referring you business, and you've grown into a very impressive firm today. So what are some of your, when you think back about the trajectory that you've been on as an entrepreneur and founder, what are some of those inflection points that are most meaningful?
It was as the industry grew and it met some of the needs we had. Technology developing was really an important part of being able to develop our firm. The custodial platform in the early 90s, where we could actually have our clients' assets held and work with them, that was another important inflection point. And then we spent a lot of time just, working and building different methodologies of finding growth. Back then, it was really organic growth was your only outlet. And I'd fast forward and say that continued, nicely for a number of years. Along the way, we developed different product lines, different services. We branded things differently so we could have different approaches. We adopted a saying called rah-rah, which was a methodology for growth. What are we going to focus on? So rah-rah, which, the great cheer stands for retention, acquisition, referral, and appreciation. And when you think about it, those four areas are what grows your firm. So, retention is hold on to those clients dearly, make sure you don't lose them. Acquisition would be opportunities to look for, whether they're advisors or firms to join us. Referral is, of course, the hard blood of, finding a new source, a channel of new clients. And finally, appreciation was market appreciation, what growth that might give you. The only one you can control of any of those would be the referrals, would be the organic growth of that. So that became, a focus of how we'd be able to achieve that. And then that took us to, I'll take it all the way to 2019 as we continue to harden our infrastructure, and build a really good firm. We looked at what's the next growth look like, what's our world going to look like. The industry began consolidating, lots of opportunities out there, and we had an opportunity out of strength to look for a new COO or prior COO. Actually went on to become CEO of a firm, and he said, Grant, this firm is so good, Wescott is so good, I'm going to find you a great COO. And it became his mission. It was amazing how he networked us. And so the short story was, looking for somebody who was, fabulous and really interesting in the financial services, who could have a different look than what we had, the entrepreneurial small business growing out, and bring somebody from the larger corporate world who would match. And that, of course, was Ms. Carrie Delgott. And so that was our hire. That's 2019 is when she joined us, and it's been inflection points since then.
Grant just named a framework that has not appeared on Growth Leaders before. Rah-rah, retention, acquisition, referral, appreciation. The cheer-style mnemonic is memorable, but the analytical point underneath it is worth sitting with. Grant frames referral as the only one of the four a founder can really control. I would push that a little. I think founders shape retention through service design and advisor coaching. They shape client acquisition by building a scalable growth engine at the corporate level. The market handles appreciation, but Grant's instinct is right about where the active offense lives. Referral is the lever you build a firm around, not one you wait on. That is where Wescott anchored its philosophy nearly 40 years ago and still anchors it today. Naming a philosophy and building the infrastructure to execute it are different problems. The person who arrived in 2019 to build the second was Carrie Delgott.
It was an interesting time to join because there was a lot of success and momentum, but I did see an opportunity to take a step back at that point and take this initiative, this growth initiative, and really create an engine. Start to think about it with some more cohesion, and the program manager background in me tends to break things down into people, process, technology, and I add a fourth, which I think is a critical fourth that should live up with those other three that are so recognizable, and that's data, which is becoming more and more important to running a healthy business, but also really informing a terrific growth strategy. From a people perspective, we brought Alex on to lead our business development efforts, and a dedicated resource in really leading that strategy, and then taking that and actually bringing about the various different tentacles and initiatives that we'll be able to speak to. He and I partnered very strongly with our manager of marketing and communications, which is also a dedicated resource that we have in-house, and I think a critical part of the team. Not only from a leadership perspective, we started to identify various different individuals that we felt could play point on different initiatives or different channels. Maybe a COI, maybe one of the custodial referral programs, maybe even content. So starting to engage a lot of others, and this created a terrific collaboration. It was a sharing, but also provided a little bit more specific roles and responsibilities of how it was all tied together. From a process perspective, certainly starting to think through our lead generation process pipeline, beginning to really segment where clients are within that pipeline, the workflows associated with that, and developing out a lot of the various different reports, using all of that data and intelligence. You have to be smart about what you want to gather, what you want to report on, making sure there's consistency and good data hygiene across the organization, because you're pulling a lot of different players in, and beginning to make some intelligence out of that. We also restructured our sales and marketing committee and restructured our sales and marketing department. So both from a strategic and a tactical perspective, just talking a lot more about the various different initiatives. And I think that it was a point where we really increased engagement. There was a lot more collaboration and discussion around our growth agenda. From a technology perspective, we transitioned over to the Salesforce Financial Services Engine. We adopted their marketing tool. We began to use improved technology for calendar management, for data gathering. So, really beginning to think about the various different systems and tools that we wanted in place. And then, ultimately, beginning to turn it on, right? So you build this infrastructure, but you have to turn it on. You've got to begin to energize and ignite a lot of energy around the opportunities at hand. Two other things that I'll mention in the build phase, I'll say, would be designing a new incentive program. So we have now a sales incentive structure that is richer than the one that was in place previously, and we transitioned to a service incentive structure. And so you're really starting to align those incentives much more so. We also spent quite a bit of time over the last 7+ years investing in talent, that second generation of advisors, because we were growing. Clearly, we did need to hire, but hiring very purposeful for the right skill and the right talent, individuals that had a growth mindset and wanted to be a part of an entrepreneurial organization that was building out a lot more infrastructure to be able to leverage. And, I think about the fact that we were able to take care of the clients, right? You needed individuals to really begin to build out that bench strength and taking care of the clients. And as Grant mentioned, the first rule of growth is retention, right? So make sure that your current clients are really being cared for. But also beginning to think about succession planning for some of our advisor team and the client transitions associated with those succession plans. And we've been around long enough now that we're lucky enough to have had not only G1 clients that have now engaged their adult children and G2 clients, but even G3 within that same relationship. So having some of the younger talent come in and being able to take a lead on some of those new engagements for that second and third generation has been great.
Most operators stop at 3: people, process, technology. Carrie's argument is that data has graduated from a reporting function into a critical infrastructure layer. You cannot make intelligent decisions about which channels are producing, where you are growing, or which advisors need support without it. So Carrie built the framework. The person she recruited into the business development seat inside it came from a background most of our audience would not expect.
Alex, you have a non-traditional path to being in your role at Wescott. You are leading growth as a CFP who came out of Pandora Media, running large-scale digital campaigns. I can't say that I've said that before on the podcast or met anyone with a with that type of path. So how did you get here? And how has your experience helped you to think differently about growth strategy for Wescott going forward?
I love that question, Meg. So, yes, it's a little bit of a non-traditional path. You haven't said it before. I haven't seen it before, other than myself. And I spent time in other industries, usually in a sales or sales adjacent capacity. And the most recent one of those roles was, as you mentioned, at Pandora. And I had the really good fortune to be a part of a company that was really towards the top of its game. And so I saw how good infrastructure and good sales really hums along. While maintaining some element of an entrepreneurial spirit, because as we know, it's a tech company and it started in a gentleman's garage. When I joined Wescott, through originally a conversation that I had with our CEO and founder, which was one that frankly he was not expecting, because my path had been completely apart from financial advisory. I grew up around this business. There's a photo of me when I was, 2 years old. I had a little suit jacket on and a little briefcase, and just always kind of was in the back of my mind, having as much respect for my father as I do and seeing what he did and maybe not understanding it quite as well as someone older than 2 years old might. But I approached him and I said, I'd like to see how I can contribute to this thing that you've created that has been so successful. It's not a family business. I'm obviously a family member, but seeing my family member achieve what he had achieved, I wanted to contribute to that legacy. And so when I came on board originally, it was to work on one of our product lines that was designed specifically for accumulators. And the idea was, let's put something together that will service that group of people such that, they may not have the asset minimum that we're traditionally looking for. They may not even have the level of meaty planning that we're looking for or at the outset, but we know it's coming. The trajectory is really strong. And so we put that together over the course of a couple of years. And as part of putting that together, that included filling the pipeline. And so while building and executing, also doing business development and ultimately getting clients into this. And so when, as Carrie mentioned, we hit, and Grant mentioned that there were a couple of inflection points that we hit where we said, we probably want to formalize this even further. And at some point, my hand was raised for me. Carrie actually suggested to the management committee, after a reasonably exhaustive search externally, that we look internally, and she threw my name in the ring. And it has been maybe the best career fit I could have asked for because it blends a number of passions that I have. I like to talk. I like to talk to people. I like to help people. And our style of sales, which many people look at as a maybe a dirty word, we do not, because it's consultative. Ultimately, what are we trying to do? We're trying to help people. Revenue is our oxygen. Our business is built upon good client service and obviously retaining and attaining existing and new clients. But ultimately, what we're trying to do is be helpful to them. And so that really tied in nicely with both my approach to things, to business, to life, as well as what the business was looking for at the time. And so we can get into some of the more operational things that we did, which, headline, centralizing a business development resource that can then grow tentacles across the organization to ultimately allow everyone to be successful, not the least of which, of course, is the overall business. But that was really my charge, was to look at what we were doing and try to centralize it and then democratize it.
One of the reasons Grant hired me was my skill in talent identification, clearly.
And we continue to pat you on the back for that, Carrie.
Well, and I'd like to take credit for identifying you. So
it's all connected.
Like his father, Alex has a unique outsider's perspective to sales and infrastructure within wealth management. He borrows insights from an industry that is a little less reserved when it comes to innovation and sales. What Alex brings is campaign optimization fluency, the ability to look at a channel, read the numbers, and make a resource allocation decision quickly. His charge, centralize and democratize, is a useful shorthand for something the industry has been trying to figure out for years. How do you make business development a firm-wide function without making it a firm-wide burden? Before we get into how that works operationally, I asked the team to step back and give me a full picture of where Wescott's growth actually comes from today.
Before we start to dig into some of the specifics, and any of you can answer this, I would just like to break down today in 2026, what are all of sort of the levers for growth in the Wescott business?
Sure. So we start with the traditional. Obviously, client referrals are a piece of the pie. However, for us, they're not an outsized piece of the pie, more a plurality than anything. We have custodial partnerships, of course, digital. But when I say digital, I really mean digital campaigns specific to lead generation. Mm-hmm. At least that's an area that we think about and we've exercised before. And that may be a lever that we turn back on. Then there's the digital brand presence that FICOM has been so helpful in elevating for us. Of course, COIs. And that is a really large term that means a lot of things to a lot of people. Our COI buckets are kind of divided into two categories, I'd say. The first is really vertical driven. Law firms are a huge vertical for us. Pharmaceutical was a large vertical for us on its own, and then by way of an acquisition in 2022, it became that much more of a focus for us. And of course, referrals from our team members, whether they're advisors or they're back office folks or they're on the management team, we all certainly drink the Kool-Aid, and there are plenty of clients who have come in that way as well.
Alex just laid out the channel map. Before we go any deeper into any of them, I want to spend some time on the one that has been working the longest, because it is not really a channel at all. It is a structural relationship that has been compounding for almost 40 years.
I want to talk to you, Grant, about the fact that 40 years later, almost 40 years later, that Wescott still has a focus on the legal profession, which, now that we've heard your origin story, makes sense. Right. But I don't think that it necessarily is a foregone conclusion that the fact that you were born out of Duane Morris would have meant that 40 years later, you're still focused on this profession and still have a really strong, mutually beneficial working relationship with the law firm. So tell me about sort of in today's, in the way that the relationship exists today, how do you leverage the Duane Morris relationship as a driver of growth?
So it's interesting because it's waxed and waned over the years. When I started with Duane Morris, I think there were 60 lawyers. Today there are around 900. And that's indicative of what's happened in the legal profession. So in the beginning, actually, most of my business did not come from Duane Morris, did not come from law firms. It came from some of those hustles that are out there where you find, areas of growth that that as an entrepreneur, you might miss a paycheck, but you've got great optimism, enthusiasm. You're going to find the right place, and we find the right opportunities. Now, fast forward quite a number of years, and Duane Morris, but also just being adjacent to law firms myself, still being very active in the legal profession, and in the legal community and the legal alumni. Had lots of opportunities to be profiled all the time. So we had, part of it is also knowing that lawyers are a professional clientele that have their own, in some ways, unique ways in business, their own structure of the law firm. And so in any area, when you get to really get a sense of what is their drivers, what are important to them, and how you can have solutions, it has stayed with us, and even more so today, compounded to a really good vertical for us, both coming from Duane Morris, but also from other law firms and lawyers, and actually general counsel inside of major corporations and the like. So that's the that vertical, which is really terrific, which sits next to other verticals and other executive opportunities that we have.
And what does it take to nurture those types of relationships so that they're actually revenue generating?
Well, that's a great question. So it's really like any client or any business. You have to show a certain expertise and a path forward. I think in financial planning, the biggest thing is if you can get somebody to vision what it's going to be like after they engage you, which is really hard sometimes for them to do. If they have a specific problem to solve, then it's easy. You can solve that problem. But if they just, as a general sense that they are maybe a little uneasy or whatnot, they can't always vision quite how impactful we're going to be. So that's the work that we do to nurture those relationships. And by the way, that spreads like wildfire. It really does. They beget opportunities within other law firms, with other client groups and practice groups when they hear what it is that you've been able to accomplish. And it's definitely a wow factor. And I'm not saying anything that others in our industry and our profession haven't found. It's just once you make the pain go away, or give them a view to what the future is going to look like in a very cogent, successful manner, and they can see the indications of success among their peers, it's really a terrific client referral opportunity.
This is a unique 40-year-old structural relationship that most in this industry can't copy, but everyone can learn from how it has been nurtured. Understanding an industry's clientele deeply, watching career paths, and life plans start to follow familiar patterns. The firm's second major vertical came through a different route entirely, but was informed deeply by this experience. An acquisition in late 2021 expanded Wescott's pharmaceutical niche, but in Grant's own words, initially sent the growth rate in the wrong direction.
And in addition to having a vertical within the legal profession and law firms, Alex, you also mentioned pharmaceuticals and you referenced an acquisition. So I know back in late 2021, I think it was December of 2021, Wescott closed your largest acquisition in the history of the business by bringing on asset planning services. And asset planning services as a business had a very long-standing Merck executive niche, so in the pharmaceutical space. What was it? Was that the main driver of that acquisition? Was it the main driver that they had this professional niche? Was there other things associated with it? Like how much of the niche was leading the acquisition strategy?
Yeah. So I'll defer the ultimate decision for why the acquisition made the most sense to us for my management committee. But what I will say is that as a driver of growth to come together with an organization that had such a specific focus and a level of expertise that is nearly unmatched, I'd say is unmatched, specific to one of the largest organizations in one of the most profitable industries there are. It made a lot of sense from an organic perspective, and the inorganic move made a lot of sense from an organic perspective. Once that acquisition closed, to say nothing of integration and all of the operational elements that go into an acquisition, and then ultimately bringing two firms together as one, we moved fairly quickly to turn on the spigot, if you will. APS had for a very long time a very long list of existing clients, and with some folks knocking on the door. And so we wanted to open those doors as quickly as we could with thought to make sure that we were well integrated in order to handle those new clients. And so through a number of different initiatives, digital and otherwise, we began shaking the trees. And what we found was that was one great way to drive growth within an organization. But then, of course, we came into that acquisition with a bevy of existing pharmaceutical clients, Merck included, but not exclusively. And so there was expertise on the Wescott side of the ball. There was expertise on the APS side of the ball. You put those two together, you start shaking the trees, as I said, and you really give yourself an opportunity to become more of a powerhouse. And so we only expanded as two organizations that became one to grow that vertical in a pretty significant material way. And to my dad's point earlier, this exists in parallel, with our law firm focus. To call it a focus is maybe even a bit of a strong word, because ultimately what we're trying to do is look for folks who are facing high levels of complexity, and it's just gotten too big. It's gotten too. I need to take this burden off of my shoulders, and I need someone to partner with who can understand my pain. These are all good problems to have, but they're problems nonetheless. And so whether they are partners at large law firms or pharmaceutical executives or successful entrepreneurs or Fortune 500 executive level folks and so on, and we're talking about one member of the family that we're ultimately serving and maybe just one generation of that family that we're ultimately serving, we haven't looked at one of these verticals as being more important necessarily than another, because they all have been successful drivers of growth for us in one way, shape, or form.
Meg, maybe if I can just augment on one point, which was when we, from the strategic point of view and looking at this acquisition, as Alex said, it was very exciting about their large client base in an area, not just Merck, but pharmaceuticals, which was a strong area in our region. And so what we were thinking about was they had actually become capacity constrained, and some of their growth was curtailed dramatically. We felt that we could turn that growth engine back on. In addition, they had only been in the pharmaceutical area, and as Alex mentioned, didn't always include or didn't look at other opportunities that were associated with their clients. And so that was another opportunity for us to go in and introduce a growth opportunity that they had not pursued for some time.
So were you working with an investment banker and you said, hey, I want you to go out and find me an RIA firm who works in pharma? Or was it you happened to come across, what was the origin story that led to that acquisition?
So we were open to a number of different types of firms that had synergies with us. In this particular case, that firm knew us, knew of us, knew that we were in that space also, and had some respect for what we did and the way that we did it. So they felt that culturally it would be a good opportunity and a good match. we similarly knew of them. So when the investment banker brought us the opportunity blindly, they just said, there's a firm out there with this profile. It looked very interesting to us. And so when we looked at it, we said, well, we're looking for growth engines. This is a growth opportunity. And in fact, when we, post acquisition, it actually sent our growth rate down, because now we're, working off of a larger denominator of assets, where we had our Wescott group developing the business, but now it was at a slower pace on all of the assets until we could start working and making the assets of the acquisition, APS, start to bear fruit on, as Alex said, whether it was if there was pent up demand from the executives, as well as other opportunities that just came from their very healthy group of clients.
It's a scary thing for any founder to admit what Grant just did. Post-close, the growth rate went down. The denominator got bigger before the acquired client base started bearing fruit. That is the honest math of integration, and it almost never gets said out loud because it sounds like the deal did not work. What Grant is actually describing is a firm disciplined and patient enough to absorb short-term dilution for long-term structural gain. It's an insight many younger firms can benefit from. We have covered acquisition strategy in depth with Mission Wealth and Pathstone. Wescott's version is the most candid accounting of what the integration period actually costs. Carrie has the operational detail.
Carrie, I've actually heard you talk at events before about the post-deal integration. So what were some of the learnings that you had after the APS acquisition?
Yeah, so it was a sizable team. So to put some numbers to this, it was an $800 million organization, 16 individuals, most very tenured within the organization, and over 200 clients. So it was a pretty heavy lift over a duration of time. I would say about 18 months till it really settled in and started to feel like a cohesive group. And that was a phased approach. So we did have the luxury of really chunking out the change for individuals. Not a situation, many of the serial acquirers, you wake up on a Monday morning, you flip a switch, and you're looking at all new systems and processes and et cetera. So we really thought through and wanted to learn a little bit about where they were bringing some best practices to the table versus where we knew we had hardened infrastructure and best practices that we wanted to migrate the team over to. But ultimately knowing it was going to be 100% integrated. And, the change management, the change leadership was definitely throughout the organization. We engaged individuals across both the Wescott team and the legacy APS team to work together on roles and responsibilities and some process changes and the change associated with that. People have heard me say before, people are hard. So sometimes it was surprising. You sort of be moving along and all of a sudden you sort of hit a little bit of a roadblock and you say, that's the thing. That's the thing that they're holding on to, or that they were, having a hard time with as it relates to adoption, tool adoption, et cetera. But ultimately, our infrastructure was really strong, and we were upgrading some systems and tools pretty significantly. So it was just really about giving people the time to digest the new information, learning the clients, and then beginning. We do have a team methodology for working with clients. So there is typically there's always a primary advisor, typically an adjunct advisor, and in many cases, a relationship advisor. So really starting to get the teams to work together as it relates to those opportunities, particularly when you're expanding beyond the Merck opportunities into those individuals' referral networks, and how we could work together and cross-pollinate the teams and the learning and that journey. And that was really exciting for everybody because it was a very talented group of individuals. So that talent acquisition and then marrying that together with all of the subject matter experts that we're bringing to the table. That advisor team certainly is the central point for the client. But we both had in-house and adopted new subject matter experts in the space of tax planning, estate planning. Our clients have interactions with our investment management team, et cetera. So really pulling that all together for the client experience.
And now imagine that from a sales perspective, to be able to tell that story after January or on January 1st, 2022, to talk about a firm that we were already going out into the marketplace and bragging about because we believe in the service that we provide, and it's been our clients certainly have validated that point, but the increased level of the universal capabilities now, the universal strength of the bench, there was that much more ammo to work with. And so as someone focused on growth and business development, it was really, really exciting to be able to go out and tell that story.
Carrie used a phrase here that I think will land with people. People are hard. Even when systems and technology are in place and seemingly effective, you still need people on board. Every integration plan has a change management section. Almost none of them budget honestly for the specific personal friction of asking someone to adopt a new tool after 15 years of doing it differently. Once again, the patience gained from a 40-year view helped them weather this moment. And the operational discipline that shaped that integration, knowing what the infrastructure can absorb, being precise about what the numbers tell you, showed up in another experiment Wescott ran around the same time.
So there's a lot of different levers for growth that you're pulling today. How do you operationalize that at scale? And Alex, maybe this could be a good time to talk a little bit more about the sort of centralized, decentralized business development function. But I'm curious to know, as a $4+ billion asset-based business, you've got scale and size, and you're not one of these massive aggregators who have teams in the dozens for every single function. So you're doing a lot of things and doing them well. How do you operationalize all of that?
I think that starts to get illustrated first by, one of the lessons. I mentioned that we turned off our digital advertising a couple of years back. What we found when we this was table stakes, right? You got to do Google ads, you got to do Facebook ads. And we needed to. What we found was that it was not necessarily the right approach to that channel because of the great amount of volume that came in. And it's not to say that a nearly 50-person firm can't handle volume, but that was a lot. And most of that volume were either unqualified or untraceable individuals. So the lesson from that is make sure that you're looking at your numbers. Make sure that you're checking your data and doubling down on the things that you know are working. It doesn't mean don't experiment. It doesn't mean don't take risks, but be smart about the risks that you take and be even smarter about the things that you continue doubling down on.
I want to note the shape of that failure specifically because it is different from what we heard when Parallel tested digital lead generation. Their problem was conversion at Parallel. Leads came in but did not close. Wescott's problem was earlier in the funnel. The volume arrived but could not be qualified or traced back to a source. Two different failure models. Both point to the same underlying requirement. Measurement infrastructure has to be ready before lead generation scales. Alex did not abandon the idea. He suspended the experiment until the infrastructure catches up. And that infrastructure is exactly what the centralized business development function was built to provide.
The centralization of this becomes really, really important because it enables the team to not have to focus on so many balls in the air. That becomes really business development's job. And the team, therefore, can go forth and continue to cultivate their networks, cultivate their client book, but also be brought into opportunities as we source them or as they come into us, whether it's passive or active. And what that looks like in practice is you may get a client referral that is sent to an advisor, and ultimately business development is brought into that to advise, to support. It could be to lead the opportunity. It really depends on what the advisor feels like they might need in that case. And the reverse occurs as well, where a lead will come in through any one of those channels that I mentioned, and we'll figure out after usually the first conversation, sometimes the second conversation, where we're able to really qualify the individual, who's the right advisor or a set of advisors to come in and work with that individual or that family. Because again, what we're talking about is, yes, the sales practices are extremely important. We got to get folks in the door. But to my dad's earlier point, you got to keep them in the door. And so you have to have a really compelling service offering. That starts with, it's your first impression. It's your first date. That sales process, that prospective client process has to give a really good taste of what it's like to be a client. And so we've gotten really thoughtful about how we are perceived by our prospective clients. We want to make sure they understand who we are and what we do from the jump, but also the outputs that they receive, the initial reporting that we work through, the meetings that we have, the people that we introduce them to on the team in a cadenced way across the course of a sales process, all come into play to make sure that clients, prospects, feel like they really know who they're partnering with when they sign on the dotted line on the engagement letter.
Meg, maybe I can add a little bit on operationalizing from the marketing perspective too, because this really is a sales and marketing marriage. One of the things that we did when we were doing some of this restructuring was an exercise to really flesh out in a lot more detail our target client. So I think everybody knew who our target client was in a short snippet of being able to say something to the effect of $2 million in investable assets, and they typically have a net worth of between X and Y, et cetera. But digging a lot deeper into what the client looks like, the profile of the client, what do they do with, from a professional and from a personal perspective, and how do they consume content, and where do they spend their time, like where do they hang out, et cetera. So just really sort of building that out for the team to better understand and make sure that we are very clear about who that target market is. Then building out the brand a little bit more so in the messaging and making sure the positioning was aligned. All of the material, all of the collateral, all of the content that we were beginning to develop or redevelop, the brand experience and the website experience. Building credibility, really critically important. So I think they're about the media opportunities, the various different awards, the thought leadership, the prospects, and our clients too, but the prospects, they're looking at us before we even meet them, right? They're experiencing us through all these various channels. Everybody's got a phone in their pocket. Everybody has a tablet on their desktop, et cetera, right? And what's the first thing you do when maybe you say, oh, your brother's dating a new woman. Oh, I'm gonna Google and do research, right? That's exactly what they're doing with us. Building out that content engine. When thinking about that target client, what are the themes and what are the interests? Where are they consuming that content? And then being very purposeful on, you can do a really broad and deep piece with one of our subject matter experts and break it apart and use the various different channels and mediums to deploy that information. So you might have a long form, you've got a couple blogs, we turns into a few social posts, a video, a webinar, can basically take that, that topic and figure out how to compound, create a system. And then you're getting into the lead generation, right? I want to fill Alex's pipeline at the top of that funnel. Lead capture, where, what are all those opportunities, and where do all of those lead capture triggers exist? Nurture campaigns, really thinking about how to marry and together the outreach with, the proactive outreach with some of the reactive pieces that might hit somebody across those various different channels. So, it was really thinking through how to marry together all of the marketing related resources and intelligence and experiences and processes in with now the sales journey and the sales funnel, and Alex, and then and supporting his team.
And the greater team, yeah.
The ICP exercise Carrie just described is refreshingly rigorous for a firm of this scale. Most firms in this audience have a target client profile that amounts to an asset range and maybe a profession. Wescott's exercise went to personal interests, content habits, and where clients spend their physical time. That level of specificity is what makes the content engine and the nurture campaigns actually work, because they're aimed at a real person, not a demographic band. That is the growth engine. The channels, the centralization, the content infrastructure, the measurement discipline. After the break, I want to take you somewhere else entirely, back to where the philosophy that runs underneath all of it actually came from. Are you looking to supercharge the growth journey at your business? FICOM is ready to make it happen by serving as your embedded growth partner. Let us put our unmatched industry and growth marketing expertise to work for your business. Our strategy-first, multidisciplinary approach ensures your business goals stay at the forefront, so you're always aligning all your marketing activity around the growth you want to achieve. Visit us at ficompartners.com to find out more. What we have covered so far is essentially the operational picture of Wescott. 4 decades of legal vertical compounding. The 4-part engine Carrie built starting in 2019. Grant's honest math on what the APS acquisition cost before it paid off. Now, I want to go back to a moment that most of Wescott's public materials don't tell you about, because it is the moment this firm actually became what it is.
Another thing that you sort of both mentioned and touched on, which I want to explore further, is that as a business, you really know who you are. And you talk about how important that is, Alex, from a sales perspective, to be able to show an experience that is compelling for the right fit client. You talk about it, Carrie, when you're talking about your ideal client persona. It's so important to know as a business who you are. Why do you do what you do, and who do you do it for?
Well, I'll start with sort of the psychology aspect. We know that a lot of what goes on with clients is driven behaviorally, and whether that's how they come to you or how you're going to get them to be able to structure things and stay with them. But it's also staff. It's all us. We're all people. At the beginning and the end of this, we're all people. So we had an interest. For many years, we used a tool called Caliper in the assessment of hiring staff, which we found was really helpful. I think we started using that in the late 90s. Right around 2007, 2008. It was sort of the end of 2007. If people remember, that was not a great time to be in our business. The world was sort of falling apart. Markets, people were scared, people were anxious. And so I went to that company and I said, look, I think maybe we're not going to worry about spending time and getting new business, because there's no new business to be had. Let's just worry about our people. And I was really talking about our staff. And so we brought on an organizational psychologist who was actually their director of research, and spent time with his 360s and really thinking through our business. And the result of that was we made changes to our business. That really was another inflection point. And also brought in a focus on how it is that we observe how people act and interact We retooled, Carrie talked about our committees and our groups of people and our different organizational groups. And we made this a much more structured in terms of how our staff interacts with each other between and among departments. But then that pushed out, that gave us a capability. We brought him on as a COO and also organizational psychologist. In fact, his first order of business was hiring a new COO, which we did. And then he stayed on as the director of organizational and talent development, working both with our staff as well as with our clients. And again, the focus being, what can we do? Like, how can we perceive? How do we help people achieve what's their greatest potential would be? What's holding them back? And go through this thoughtful analysis. As I said, we've done this with clients. We've done this a lot of times with clients' children.
One of the most distinctive parts of Wescott's business is the clarity with which they understand who they are, what the business means to them personally, the people they serve, what they want it to represent in the industry, and the legacy they hope to leave behind. The life-minded wealth philosophy and everything that grew from it, including perfect score, emerged from a period of crisis. New business had slowed dramatically, which forced the firm to focus on taking care of the clients they already had. They invested deeply in relationships and in understanding behavior. And that experience shaped a strategy that feels far more authentic than something engineered in an offsite or abstract brainstorming session. Perfect Score was born from observation and the realities of how clients actually make decisions and the desire to influence these decisions for the best outcomes for both the firm and their clients.
Then, what are some of these other things that we want to do? The Perfect Score part of things extends how we think about people and how we want to react behaviorally. We were looking for a way, and this was probably, 10 or 12 years ago, to engage people in their financial planning and not have them focus just on the portfolio, and really deeply dive into things. And the way that we found was a checklist is like, yeah, you can explain to a client you're going to be doing these 20 things. But we made it almost like a gamification. Perfect Score was a scorecard. And we say, here are the things that we're going to do. And you get on some things, you get 5 points or 3 points. And at the beginning of every meeting with a client, we would start off with their perfect score. It was an evaluation of how they have performed relative just to building and managing the financial plan itself. We'll get into, the specifics of what's going on, but whether they've been attentive, whether they've been, it could be things like, have you been using our portal? Have you been using the encrypted emails? To things like, whether we've gotten information or whether we have copies of their documents, whether they've sent us some documents. It's pretty far ranging. But again, a way for this, it really bonds the client. It really makes them feel like, and we always say, look, if you have a lower score, it's on us too, because we're here to help you kind of get through here. So that was branding, and we've used branding in a number of different areas to differentiate the service or the engagement that we want to have with clients.
It's such a differentiation to be able to not just have the belief of how you should best service people and clients, but to put process, frameworks, repeatability, and brand around it. Would any of you sort of say that you believe that sort of branded approach to the way that you think about client service has been a driver of growth?
I believe it has been, because for a number of reasons. One is it was really effective with our advisors. Our advisors really enjoy having that branded and that framework, that ability to have a client where if a client says on a scale of 1 to 100, and so if a client gets, let's say, an 84, we will recoil. And the client doesn't like it. They're like, I'm not an 80, I'm not a B- student. I'm an A student. Well, we've got some work to do. When that's a tool that now Alex has when he's talking to prospective clients, something that has a name with like a little trademark next to it, but something that has a process, it has a definition, it has an implementation, it has a life, it has an embrace. And so the prospective client has something really tangible to what sometimes can be an intangible. Intangibility is you're going to feel a lot better. a great weight's going to be lifted off of your shoulders. Those are great emotions. They are. And clients will say that later. But when you're going into it, you want to explain something about how they might feel. So that's an effective, one of the effective processes of getting there. So branding is an amazing thing because it can immediately elicit some emotion or some feeling of certainty. And the fact that you've branded it gives it an additional legitimacy.
And just from a growth perspective, in many conversations that I and other advisors have with prospective clients, we'll hear something to the effect of, well, I saw your website and I really appreciated the approach that I got from absorbing your web. We get complimented on the website often, which says something about how we are going about describing what it is that we do, and maybe to your point, who we believe that we are and who we want our clients to believe who we are, because that's what we practice.
Perfect Score is the first scored, gameable, repeatable client engagement framework we've had on growth leaders. What TruePoint described in their prospect liaison process and what Mission Wealth described in their wealth strategy group are both meaningful client-facing innovations, but neither translates progress into something measurable and personal in quite the same way. A score gives clients something they can track, improve, and ultimately take ownership of. The philosophy behind it does not stop at the client experience. The same emphasis on accountability, intentionality, and measurable alignment shows up in how the firm defines itself publicly, what it believes a wealth management business should be responsible for, and the standards it chooses to hold itself to beyond growth alone.
Another real demonstration of who you are is that you are a certified B Corp, and you have been since 2020. You've earned Best for the World Workers recognition from B Lab. And I just know from my experience in the RIA space, not that many RIAs are willing to submit themselves to that level of stakeholder governance. And so, Carrie, maybe talk to me a little bit about how being B Corp certified has changed the way you, how it shows up from a governance perspective, and what benefits has it had to the business?
Yeah, what's interesting is, it is certainly a verification of our commitment to social and environmental objectives, and it really aligns very well to who we are, our firm's values, especially around inclusivity and mentorship and social impacts and the care we have for our clients and their well-being in our community. So I don't know that it changed us in any way. It was almost as if it was such a good fit for us. And it was a peer firm that brought awareness to us. And as they got to know us a little bit and said, you really sort of fit the profile of a B Corp. This is something you might be interested in. And so I went through the rigorous process, which it is a very high bar. And we were quite successful in moving through because we had, I think some terrific programs in place, and we were really able to orient around their 5 pillars. Their 5 pillars are your employees, your governance structure, your community, how you're giving back and impacting your community, the environment, and your customers. So it is, I would say, and Alex may be able to speak to this a little more so, but I don't believe it is a strong area of client attraction, first and foremost, front and center. I'm selecting you, or I found you because I know you're a B Corp. But it certainly does play into the conversation when it is, a part of the conversation and something that a prospect learns. That's interesting. That really aligns with my values. I feel good about the fact that I'm partnering with a B Corp because I know and understand what that's all about. It's also been very successful from an employee talent attraction perspective. I certainly find in the most of the interviews that I take part in, which I do meet with every individual that is hired into the organization, they are intrigued by joining a B Corp and are also really excited about the fact that it aligns well with their personal values. So talent attraction certainly, I'd say, has been what I've seen and felt the most, really being a part of something special. And it's just a testament. It happens to be a terrific stamp of approval, but it's already here. It's, sort of in us as individuals and what we do and how we show up every day. And then from a client perspective, I think it's just, again, another piece part of the conversation to say, this feels like it's a really good fit for me.
Carrie just offered one of the most honest framings of B Corp's actual ROI that we have heard from any guest on this show. We touched on it with Brighton Jones, but their framing leaned towards client attraction. Carrie's answer was almost the inverse. Clients do not typically find Wescott because of the certification, but prospective employees do. And that says something important about what a B Corp designation signals inside a professional services firm. It reflects a culture where values are expected to show up operationally, not just in branding, and where people believe the firm is building something more durable than growth alone. For a firm whose competitive advantage depends on the quality of the people it recruits and retains, and that advantage connects directly to how Wescott has approached building its next generation of advisors.
Talent attraction is a key constraint in the industry. And Grant, you and I have the opportunity to sit on the CFP Board's advisory council together, where we're volunteering our time and efforts to help to advance the financial planning profession, primarily through helping the CFP Board to create a more diverse and robust talent pipeline, which I don't need to explain to anybody who's listening why that's important today. How has Wescott tackled that industry constraint of attracting, building, developing, and retaining next generation talent?
It's a deliberate process, but I think it's so endemic in who we are. And as Carrie is referring to things in the Certified B, doing that Certified B Corp was, as Carrie said, easy because it's sort of all the values of who we are. But taking it to both recruitment, the hiring, and then the retention, on the recruitment, that sends you different places. You look for the next gen talent from where they are. The younger ones that we're looking for are still kind of casting about in the profession. They may not be in some place which engages them as much, may not bring them into client opportunities, may not have a well-defined career path. I know that we have a very well-defined career path, and that's very deliberate, in part because we all want to know what we're doing. We all want to know what we're building to, and we want to know what the milestones as we get ahead. Another part of it is in the hiring process. We bring out a lot of our people to go through what is, starts off as a screening process, which is a lot of this sort of that same psychological profiles that we're looking at. But also we engage our younger members in the process. They are very happy and very proud to be part of a hiring process, but they also see the prospective staff, prospective employees see that we respect the opinions and the thought leadership of our younger advisors. And so they engage and start talking about what's life like at Wescott, and they, get a pretty good report. And then in retention, again, I go back to career path and certainly career path, but also being able to be involved in not only the business in terms of working with clients and the training that goes along with it, but also the business of the business. We'll engage them in some incremental opportunity. We're always, making incremental changes, incremental learning, incremental business designs. And we'll recruit them and say, how would you like to work on this discrete part of this project? And so that gives them experience in terms of the business side. It gives them another skill set to have and it also bonds them to different people within the firm. So, that's been our approach, and we love them. I mean, it really is just, it's a great atmosphere, and we do everything to encourage their happiness, but also their success.
There's not that many RIA firms who participate with us on the advisory council, the working groups for the CFP Board Center for Financial Planning. So I love that you do, because I think it's so important. It's harder in the RIA space because it's much more fragmented than when you look at the large wirehouse models. A lot of our peers and colleagues on the advisory council are from the big, national wirehouses, broker dealers, employers of thousands of CFPs. And that's important work also. I think for the RIA space in particular, it's acutely important for us to really think about how we are developing the next generation of talent and being open for business as such a wonderful model within the financial advice space.
Yeah. And it's important to have those larger organizations to help train. Sometimes I don't mean this disparagingly, but sort of a minor league, but also an opportunity for them to have, a great influx of people in and recruit for it. But I think for the RIAs, we don't get the talent that we're looking for doesn't get homogenized. It gets trained. It gets very thoughtful. We're still all, even in the larger, RIA firms, it is still very much a firm setting where you can feel the entrepreneurism and the acceptance, and you can have, cultural discussions and values and experiences, and that's really important to everybody to feel part of that and that they can be their own true self, and that's really important to us.
Grant's point about the wirehouse as a training minor league for the RIA industry is a generous and accurate one. And it connects directly to something Carrie mentioned earlier, the G1, G2, G3 client relationships. Wescott now serves 3 generations within the same client families, with younger advisors leading the engagements with adult children and grandchildren. That is the growth flywheel fully expressed, the talent model and the client model compounding against each other at the same time. And the culture that makes all of it possible has a specific weekly expression.
The one piece of this that feels really important from my seat is growth, just as a general philosophy, is really important across the firm. So it's not a centralized, or it's not an area, just one particular area, say the business development group of the team, or just that the management team is good. Everyone is focused on it. Everyone has skin in the game in a positive way. And we've set ourselves up from an operational standpoint to both enable that for folks so that they can take those swings of the bat, and then to make them as successful as possible so that they actually make contact. So it has, over the course of certainly many years before since I've been here, it's been part of our DNA. But Carrie referenced earlier some incentive additions to our compensation structure, and that was really purposeful because we wanted everyone to feel committed, not just from a philosophical standpoint, but financially as well. And so that's been a really great addition to our drivers of growth, if you will.
Can you give me any more specificity, like maybe even just thinking about what Carrie or Alex, whichever of you would like to answer, but can you offer some more specificity around what that actually looks like for your team to have this really concerted effort towards firm-wide, firm-driven growth?
Yeah. Carrie, would you like me to take a swing at that first? Yeah.
Sure.
Okay. So it's really twofold. One is the culture that we've built to this point has been one around, you hear the term family in corporate environments, and you really do kind of cringe. We really mean it here. I mean, and hopefully that comes across in our branding and the approach that we take with our clients and the way that we hire folks and the screening that we, from a psychological standpoint, that we want to understand who they are. One of those points is around empathy, because if you're not empathetic, how can you sit across from somebody and really feel their issues and their matters and help them with it? And so you start with a basis of everybody's in the same boat. And we generally are paddling in the same direction. How do we paddle a little bit harder? And that's where this incentive piece comes into play, because it's built into the culture from the jump. But then we really want to supercharge that. And the way that we do that is we say, okay, everybody, let's put some financial backing to this, so that not only are you being compensated for the work that you do as an advisor, and ultimately, if new business comes in as a for the totality of the business, that business succeeds, everybody succeeds. Well, now you can succeed individually as well in addition to that. And that has certainly been really helpful in deploying some of the centralized leads as they've come in to appropriate advisors across the team to allow them to go and as I said, take swings at the bat.
Maybe I'll add, so we have an infrastructure that supports the growth agenda. We have resources, a library of resources, and we're always asking what else might you need to be successful. We have training opportunities, training from an internal perspective with peer group discussions, and also from an external perspective, we'll bring in a subject matter expert to talk a little bit about various different techniques and tools to be successful. Advisors are going to be on across the spectrum of comfort in really thinking about, how to up their game as it relates to business development activity. Some lean in very naturally. Some it's very interesting because they don't even think of themselves as business developing. They just serve their clients really, really well, and magic happens. So we've got a really terrific, talented group of individuals that I think are they're learning and growing from each other. They get the opportunity to watch each other in action. That team mentality that I mentioned, it's not a one-for-one team. It's not the same adjunct supporting the same primary on the entire client base. An adjunct may work with 6, 7, 8, 9 different primary advisors. So they're learning and seeing those individuals in action and taking, different pieces of knowledge and making it their own. And of course, there's always reverse mentoring opportunities where maybe some of those seniors are picking up some new tips and tricks and phraseology from some of the more junior advisors and that talent that we're bringing in.
Meg, if I could just offer a real quick story, or it's really a distillation. Every Monday morning at 9 a.m., we all get together. It's a session called Monday Morning Quarterback. I host it. The first 15 minutes is thematic. Something's going on in the world. Something's going on around us. It starts off with music, so there's energy and interesting. There's musical history. And then we go into the next 15 minutes would be report out of the management committee. We talk about things like growth, what's going on real time, celebrate people who've made some great inroads or whatever it may be, and then just go quickly around the table. What are some of the insights that we learned from last week? What do we have coming up for this week? So it really is a nice time each week for everybody to come together in that family way and have a little fun, but also to reinforce all of these things so it's fresh in everybody's mind right at the start of the week. And that's really been, I think, a very successful, started at the pandemic. Yeah. We're all remote. Let's all, find ways to get together. And it's been very vibrant since.
Monday Morning Quarterback is the kind of low-cost, replicable cultural mechanism that listeners can actually take back to their own firms. It costs nothing except the commitment to show up consistently. And it started like several of Wescott's most important systems, not from a formal strategic plan, but from paying attention to what people needed in a particular moment. Grant did not create it as a growth tool. He created it to keep people connected during the pandemic. Over time, it became the weekly ritual that reinforces everything else. That is the pattern with this firm. Their strongest systems tend to emerge from observation, responsiveness, and human connection rather than top-down design. They identify something important in real time, respond to it quickly, and because the response is grounded in genuine need, it endures.
I have one final question for each of you. We've got like 9 minutes left.
Okay,
And then I'm
quick.
sure you probably all want to go eat dinner. So I'll start with you, Alex. In your role, what are you dreaming about as sort of the next big initiative for client development and growth?
It's twofold. One is, of course, on the technology side. We're looking for efficiencies in every way that we can that does not spoil the prospective client and client experience. Obviously, AI is pretty prevalent these days. And we're, like many other firms, experimenting and beginning to deploy things in a thoughtful and strategic way, but also in a practical way, because ultimately we know that we need to at least keep up, and we'd like to do even more than that. So there's this integration between AI and tech that and client service that and the sales process that I'm looking forward to. And then the other is I've spent a lot of time this year out on the road, and we have done a number of visits to some of our COI offices and gotten some great traction or created some new traction. And there are referral opportunities, symbiosis in terms of referral opportunities that we're discussing. So doing a lot more, or at least certainly more of that as the year continues and into next year is really energizing and really exciting.
Carrie, in your role as president and COO, you have so much to be proud of when you think of the growth and success that this business has achieved. What's going to make you proud in the next chapter for Wescott?
So we have had some really terrific success in the last 5 or 7 years of attracting a super talented group of individuals. And we're watching them blossom into fantastic leaders of the organization. And I love working with each and every one of them on the new opportunities that we have for them as we grow and develop. And, so some really fantastic talent, not just from an advisor perspective, but from an impact perspective, from a leadership perspective, from a talent management perspective. So I think that's really what I'm going to enjoy the most in the coming years as we're moving into our next chapter. We've got some pretty terrific stories, and I think we've got a few that there's chapters that have yet to be written, and I'm excited to see where the book lands.
And Grant, you've led this remarkable business for almost 40 years. As you look ahead to the next chapter, the next 3 years, the next 5 years, what will success look like for you as the founder of this business?
Well, thank you for not saying for the next 40 years.
I did that once on a podcast interview, and then I could see the guy doing the math. Like, well, I'll tell you one thing, I'm not going to be here.
You know what? I'm going to play off with what Carrie said. When she talked about some of the people who have joined us the last 5 to 7 years, it's really also the people who joined us 20 years ago, and many of them who are now in their late 30s and early 40s, who are leaders, the head of our advisors, for example. And there's lots of examples. I mean, we're just really, really smart people. So as I look at them, I've moved to the role of relationship manager and work with many of these advisors in clients who were my clients for years or generationally down. And so watching our firm continue to roll out new opportunities, roll out new initiatives, get everybody to continue to have that entrepreneurial thought, have everybody continue to think about how to execute, how to stay together, how to be good humans, develop great families, keep that familyness about us. but work really hard and really smart about what the mission of the business is, which is to, to achieve client goals, and for us to, really pull together and make, just change lives and support people. Whether from my standpoint, it's within the firm, within the staff, and from their standpoint, it's impacting their families and their clients. And that couldn't make me happier or prouder.
Well, if I know one thing to be true with absolute certainty, it's that Wescott is a firm made up of really good humans. So I love your answer. Thank you so much for joining me on the podcast episode. This was a real treat, and I appreciate your generosity of time and sharing and your willingness to just share insights with the community around what's worked for your business.
Here's what I keep coming back to after this conversation. Wescott's growth engine was not built through a single acquisition, a digital campaign, market appreciation, or any of the tactics that fill most growth planning conversations. It was built through structural relationships, behavioral systems, operational discipline, and cultural continuity. And almost none of those things were designed as growth strategies. The Dwayne Morris relationship was designed to give a tax attorney a reason to be a counselor. The organizational psychologist was hired because a market crisis left nothing else to invest in. Perfect Score was designed to keep clients engaged with their plan. Monday Morning Quarterback was designed to keep a remote team connected during a pandemic. Every one of those systems over time became load-bearing infrastructure for the firm's growth. That is the thing that is genuinely hard to replicate. Not the rah-rah framework, not the ICP exercise, not the incentive structure. It is the willingness to invest in something that has no obvious growth ROI in the moment and the discipline to keep investing in it long enough for the compounding to become visible. Wescott is approaching its 40th anniversary. They manage $4.2 billion for 515 families. And the systems producing their pipeline today were mostly designed in 1987, in 2008, in 2019, and in the middle of a global pandemic. Not because anyone planned it that way, but because every time the firm faced a constraint, the response was to invest inward. That is what a true growth leader looks like. If this conversation challenged you to think about which decisions at your firm you might be making on too short a timeline, the single most valuable thing you can do for this show is to please leave a review. It takes 30 seconds and it helps other growth-minded leaders in our industry find these conversations, and it helps us keep bringing them to you. I promise we read every single one. I'd also love to hear what resonated with you from today's conversation. I encourage you to find me on LinkedIn and share your takeaways. For more growth resources for your firm, visit ficompartners.com/insights. And if your firm is ready to take marketing-enabled organic growth seriously, that is what we do every day at Ficom Partners. We'd love to talk. Thank you to today's guests, Grant Rawdin, Carrie Delgott, and Alex Rawdin of Wescott Financial Advisory Group, our producers at Pod Pony, production assistant Molly Spina, and my executive assistant, Kristen George. I'm Meg Carpenter, CEO and co-founder of Ficom Partners and your host of Growth Leaders of Wealth Management. See you next time.